All right, everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. If you have any questions, please let me know by typing those questions into that small questions box that you can see on your screen. And right now I would appreciate a very short yes or why in that chat box to just let me know that both the audio and the screencast are working properly and that you can see the slides and can hear me well. Perfect. Thank you very much, everybody. Really appreciate it. Today's webinar, as usual, is scheduled to run for about half an hour. And before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to make sure that you are really comfortable with them. Essentially, it says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar, the major part. We will be looking at the charts together. You will see, and I will tell you what I'm seeing on those charts. And even if I should say that I'm more bullish or bearish on a certain chart and certain market, it's always just what I'm seeing there. It's never a trade recommendation. We want to give you guys the opportunity to peek inside my head and see what's going on there. And yeah, that's pretty much it. So it's never a trade recommendation. Please make sure you're okay with this before continuing with the webinar. And that being said, of course, we also have a risk warning, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. And with the formal stuff behind us, let's just jump into today's agenda. And our regulars already know this agenda by heart. I want to show you the markets, which I think are moving right now, looking the most interesting, available here for trading on Nadex. And you know me by now. You know that I'm not just looking at a chart and thinking, I could be trading that market right now. I want to have a plan. I want to have a complete plan, and that plan is my trading strategy. I'm looking for a certain set of rules, of conditions that must be met before I consider taking a position in the market. And I don't trade without those rules and all those check boxes really being checked off and until I see the setup that I'm actually looking for. I will be placing trades today in our Nadex demo account, and please keep in mind it's really just for demonstrational purpose. I'm not suggesting that those trades are good trades or that I would be placing those trades. It's usually just the assumption if the market was doing what I would like to see, how could this be traded? So please keep that in mind. And yeah, let's just jump directly into the charts. Just a second. And here are our charts. I want to look today at three different markets. I want to look at the euro against the US dollar as a forex pair. And next thing, I want to have a look at the Nasdaq, and there especially comparing the Nasdaq against the SP500, the E-mini futures. That's the nice thing about trading those products here on Nadex using binary options and spreads. You can trade a really broad variety of different markets, all from one account. It's really just, you have forex, you have different precious metals, for example, and you have the big indices. And you can easily trade those markets and adjust the risk position that you take on those markets from the comfort of really just that one account here at Nadex. And yeah, let's just kick it off today with euro against the US dollar. Let's get started here on the monthly chart. My analysis always takes place on the higher time frames, and then I start to drill down. I like looking at those multiple time frames because I want to get the same picture looking at each of those time frames. If the monthly chart tells me a story and the weekly chart does the same, and the story from the daily chart and the 8-hour and the 4-hour and the 2-hour chart are the same, probably something is going on there as they're all pointing in the same direction. And usually this is a good environment that I want to be trading in. So I always check the monthly chart first, what's going on here. And looking at the euro against the US dollar, we can see that the market has definitely rebounded now from this lower level that we've seen here just recently. We had a recent dip with a slightly lower low. Now we're pulling back. You can see that this is, although it's a lower low and we see lower highs, this is not really the perfect trend, downtrend that we're looking for. Why? Because, let's make it a little bit larger for you guys to see even better. We can see that the strong trend that we saw here with our moving averages clearly being separated from each other, the 10, 20, 50, and 200 period moving average. This is no longer the case. Essentially, this pullback or this extended sideways phase starting at the beginning of 2015 took so long that so much momentum got lost in the market that even the 10 period moving average for a short period of time started to pull above the 20. So here clearly it was really a very, very weak downtrend, if a downtrend at all. Lower low. Currently we're seeing some good strong bullish momentum here, and one early warning sign that this is not really the perfect downtrend that we're looking for trend continuation to the downside is if we compare this low here with that low there. It's a lower low in price, but at the same point in time, if we compare what MACD has been doing there, we can see that while price made a new lower low, MACD made a higher low for those low points. This is called a bullish divergence. It's bullish because we are currently in a downtrend, but we see signs of weaknesses for that downtrend, and therefore it's bullish. It's the idea, it's the hint that this move to the downside might be coming on to an end, and that the bears are not as strong as it could appear. Looking at RSI, we can see that divergence as well, and that's the only way we use both MACD and RSI. We look and scan for trend confirmation, for convergence, or we scan for divergence, as we see here on the monthly chart. That's the only thing how we use them. We do not care about the histogram. We do not care about the signal line crossing the trigger line. I do not care if the market is overbought or oversold looking at RSI. It's really just, I see we made a lower low in price. We made a higher low in both indicators. We see divergence. The bears might be running out of momentum, and probably it's a little bit more likely that we start to see some more bullish action. And sure enough, this move here higher has taken us above the moving average buy zone now, and price still looks pretty strong here for the month. Remember, the candle always has to finish printing to give us the final idea. So the monthly chart, unless we have the last day of the month, it's all in flux. Everything keeps on moving, panta rei, everything flows. And so we have to wait and see what's going on there. But the big picture that we get here is, yeah, it's still a downtrend, but it's a very, very weak one with a lot of early warning signs. And so the vibe that I'm getting from that chart is more a bullish vibe than a bearish one. Let's have a look at the weekly chart to get the next level of idea and confirmation here. And here on the weekly chart, we start to see that price has clearly made new higher highs, and we also made new higher lows. So clearly the weekly chart has now shifted to an uptrend. It's too early to trade that uptrend on the weekly chart because our moving averages haven't yet fallen into line. We can see that the 50 period moving average still is above the 10 and 20. I would like to see at least that those three are in place. The 200, for me personally, it's a nice to have. If it is in line, definitely just an added bonus point for me. But I would like to see the 50 above there. But that being said, good confirmation here and convergence. Every time we made a new higher high in price, MACD made a new higher high as well. So this is what a good, strong, healthy trend should look like. So the monthly gives us, at a second glance, a more bullish feeling. The weekly is definitely in an uptrend. If we have a look now at the daily chart, we can start to see that those higher highs clearly are there. That recent pullback was a little bit deep. However, moving averages are still perfectly in place. The 200 is lagging behind, but the 10, 20, and 50 are where they should be. Price is pushing higher. We have pulled back here to our moving average buy zone, and now price is just pushing higher once again. And we're trading just short of the level of 1 111. Talking about levels, we just try to see if there are any levels here on the daily chart that catch our eyes. And you've seen, I've just picked this horizontal line tool and I've just moved it around. And I was searching for points where we see multiple as precise touches as possible. And sure enough, we had a precise touch here. We had several precise touches of this level here and there and here once again. Here, not as close, not as perfect, but overall, this level here of approximately 111.39.1. The market has reacted upon that level, and therefore we should keep it in mind and see how we could use it for our trades, or maybe at this level prevents us from getting into our trades. So definitely, once price pushes higher here, I would expect to see some kind of resistance working here. Why resistance? Well, those lines, once we have identified them, are on the chart and they stay on the chart. Because you can see here, at that point, this level has worked as support. Price came down here, touched this level, bounced higher. Came back to test this level, bounced higher once again. Once it was trading below this level, price tried to touch this level, bounced back. And once again, and acting as support again. Now, trading below the level, going higher, acting as resistance. Those levels stay on the chart. Support becomes resistance when broken, and resistance becomes support when broken. And so sure enough, I expect to see at least a minor reaction to this level once price pushes higher and approaches this level. If I could change one thing about my trading with everything I know now, going back in time, I would tell me, Philip, you have to pay attention, you have to pay more attention to levels. Those levels, those horizontal levels can be crazy powerful, and they're so simple to put on the chart, and unfortunately they're also super simple to ignore. And so the big takeaway for my trading and the one recommendation that I want to give you is start hunting for those levels and just see for yourself how they work on the charts in the markets that you analyze and how you could use those for your trading in the markets. All right, let's do a recap. Monthly chart, second degree, looking bullish. Weekly chart looking bullish, daily chart clearly looking bullish as well. We are a wee bit overextended here, so and definitely not looking to trade on the daily chart, but that's the nice thing about those Nadex contracts. You have different expiry cycles, and especially those faster paced markets are definitely something that you can easily use for your trading. Now, looking at the shorter time frames, 15 minutes, 30 minutes, 2 hours, 4 hours and 8 hours. You can see the same beautiful uptrend that we saw on the weekly, got a hint for on the monthly, and that we had seen confirmed on the daily chart. All those here, pretty much the same perfect move. Let's have a look at the 4-hour chart. Beautiful move higher. Was this move tradable with our strategies? No, it wasn't. Because I want to see pullbacks that take us into our moving average buy zone in the area between the 10 and 20 period moving average. And we don't get those pullbacks here because the market just moved too fast. Well, if the market moves too fast, I start to drop down with my time frame. So if I'm looking here at a 4-hour chart, which means one candle represents a time span of 4 hours, maybe this becomes better if I look at the 2-hour chart. And sure enough, you can see that on the 2-hour chart, we come very close to our moving average buy zone. And I'm pretty sure that if we drop down here to have a look on the, let me just type it in, on the 60-minute chart, sure enough, we saw pullbacks here. And this is a very nice chart structure that I want to show you here. We talked about levels briefly before, and we can just now pick those levels here also on those lower time frames. And sure enough, you can see that we saw a test of this level here. That level got confirmed here a second time. Now we know this level, and another test, and another test, and now we get the breakout. We teach two strategies. One is the pullback into a moving average buy zone, just like here. That's usually our bread and butter trade. But the other one is our momentum breakout strategy, and this is just what we saw here. And I'm pretty sure if we put another level down right here, we can spin the same tail. We can see a touch here, another touch here, another touch there, and now we get the breakout. And please, this is almost picture perfect. Note the small candles that we get here. And once we get the breakout, it's up in the way, it's up to the race, up to the races, something like that, sorry. It's just pushing higher, and consolidation phase, small candles break out from that flat level with good, strong momentum. We can see that our indicators held up their ground fairly well. And so once we got the breakout here, we got confirmation, and that's the second strategy. Once again, those horizontal lines and levels playing a crucial role there. So you see, we get those opportunities also on the lower time frames, like the 1 hour chart here, or let's have a look at that chart here. 15-minute chart, pretty much the same thing. And we can even drop lower to have a look at the 5-minute chart. And there it's too much noise, was just a test. Let's go back to the 15-minute chart. And you see the structure becomes again much more clearer here. So the idea is that we have pulled back here to a moving average buy zone. And is this a good opportunity to go along? I don't know. Personally, what I don't like about that chart structure is once we compare those new highs here, we can see a steady loss of momentum both in RSI and MACD. And this is what makes it a little bit more likely for me to think, okay, maybe this move is coming to a rest now, and it's creating a short hold. And you see the 2 hour chart is overextended from a moving average buy zone. The 4 hour chart is overextended. The 8 hour chart is overextended. So there should be some opportunity here to see some kind of pullback. Let's have a look here at the 2 hour chart. Let's make it larger once again for you guys. And the question now could be, okay, how could I be trading that using Nadex contracts? And let me quickly move over here to my Nadex platform. And guys, just a quick reminder, if you have a demo account, you have forgotten the credentials, or for your live account, there is on that login page, you see here this forgot your login details. Just hit that button, fill in the information that you have. Usually you haven't forgotten both your email and your password, you know something. You hit that button and you're up and running within maximum a minute. It's much faster and quicker than giving support a call. Those guys are definitely there to help you, and they're more than happy to do so. But you want to be trading and trying the demo account quickly, and definitely going for forgot your login details here is the shortest way. All right, let's have a look at the platform. And we want to be trading euro against the US dollar. So we are looking here at forex binaries. And we pick euro against the US dollar, and here it is. All right, you see the different expiry cycles. Let's have a look at the 3 a.m. This contract here still is trading for 14 more hours and 41 minutes. Now we're looking here at a 2 hour chart. That's a 120-minute chart. So if we think the market might be going lower, and again, it's not a recommendation, it's just what might be happening. I don't have a clue, nobody knows. This is why I'm looking at my trading strategies, and I want to check all the boxes, because I know once I've checked all the boxes, I have a small edge. I should be winning more trades than I lose. My winners should be bigger. And this is why I'm just trying to gather as many small advantages as possible. And I'm not saying that any of those trades that I put on now ticks all the boxes. So please keep that in mind once I start hitting here on that submit trade button. Now, 40 more hours, which means 7 more candles for this, for that potential trading opportunity here for working out. Now, if I'm trying to create a short opportunity here, I would be looking at selling a contract which is in the money, which means the strike price is somewhat way below here where a price has been trading before. Because I want this price to come down. I want euro US dollar to become cheaper. And remember, how is the payout structure of a binary at expiry? We're just looking at the strike price for that. And if the market is trading above the strike price, then this contract always settles at expiry for 100. If it's trading below the strike price, it's worth nothing. It settles at 0. So the idea is here, if I want to create a short trade, I want to buy something which is very valuable now with the hope that it will become worthless, 0, at expiry. Now, what could we be trading here? Let's have a look, for example, at, and again, this is really just a just an idea about what we could be doing there. It's never really a recommendation. I think 1.10 is a little bit too aggressive to go for. Could still happen, but however, something like 110.28, something like that, could be a little bit more achievable. Now, let's talk about those terms. Achievable is just something I made up, but let's have a look at those numbers here. And I'm looking here at this contract. And let's just say I want to sell this contract here. Now, if you pick a contract, you have to balance 3 aspects. Essentially, you want to balance first the time that your contract has until expiry. We know that this is a contract that expires in 14 hours and 40 minutes, roundabout. 7 more candles. So you have to make up your mind, okay, do I think it's likely that price will start to descend at expiry below that strike price of 110.20? Next thing is, what is my reward to risk ratio on that trade? Well, I could be selling that trade, that contract here now for $92. Now, what is my maximum risk? My maximum risk is that this contract will be worth 100 at expiry, and this happens exactly when it's trading above the strike price. So I sold something now for 92. I have to settle it at 100, and the difference are $8. Let's forget about fees, commissions, and that stuff for a moment. It's really just looking at those figures here, simplified calculation. So my maximum risk is $8. However, if what I'm selling now for 92 really becomes worthless at that point, my maximum profit is 92. And now you can see that this is a reward to risk ratio of almost 12 to 1. Outstanding, very aggressive. How do I know that it's aggressive? Well, the market gives you a probability, just a mathematical probability, just a hint about how likely the underlying mathematical pricing model thinks that this move is. And you just take the mid price and interpret that as a percentage. And so the probability the market currently gives to this contract being above the strike price is around about 95%. So the market gives you currently just the probability of 5% that this stuff will be, or this trade might be working out. Keep in mind, it's just a mathematical model. We had an idea about why we thought that this could be a shorting opportunity, a potential shorting opportunity, and so we don't have to agree what the market tells us here. Now, what we could be doing, and again, it's just for demonstration, I'm not suggesting that this is a good trade. I'm selling 2 of those contracts now. Now, if price actually starts to drop down to this level, I could start to scale out of that trade, which means I could easily take profits once the market starts to drop. And let's just do that. Let's just put in an order to buy. I'm risking now $8 on that trade per contract. Now, the idea could be that I want to buy 1 contract back once the price of this contract is not 92, but let's say it's 82. So I'm putting a buy limit order. It's not being executed right now because I would have to pay 96 for that order to fill, but it's a limit order. It's a limit order sitting at the exchange at Nadex, waiting for this trade to be filled. Now, if I buy that contract with that set limit price, my maximum loss on that trade would be 82, but I don't care about that because it's really just scaling out of my position, taking partial profits. And this means I sold something for 92. I'm locking now in profits of $10 if I close that position at 82. And this means my total position of 2 contracts should not be able to become a losing trade any longer once that first profit target is hit. So let's place that order. And you can see the order is sitting here. I'm just scaling out of that trade. And the idea is price could start to go much lower and further. And I could be profiting potentially on that one as well. I could also place an order for the second leg of second contract that I have here. I would say, okay, if it's trading at the money, if it's dropped down to this level. I want to close that trade at approximately 50 bucks, and I could be putting that order in as well. I think that the scaling out of those positions is really a very, very powerful technique to take some risk off the table if the market has started to already go your way. Now, to not suggest that this is a good trading, a good shorting opportunity here right now, let's have a look at a different kind of setup here. I could be saying, okay, we are looking now at a trade which just goes for 1 hour, 34 more minutes. If you think the market is set for a rally and pushing much higher, you could already also be looking, for example, into buying that contract. Now you're buying a contract which is out of the money because you think the market might be rallying a little bit more in your direction. Now, what's the reward risk ratio on that trade? My maximum losses, I could be losing what I'm paying for that contract right now, 31.25. Remember, if the trade, if the underlying market closes above the strike price, it settles at 100. So the difference is what I paid for it and what it's worth then, 100, which gives me a maximum profit of 68. My reward to risk ratio on that trade is approximately 2 to 1. What's the probability that this could be a winning trade? Again, just from a mathematical, statistical point of view, mid price of this one here, so around about 28%. Now let's have a look and let's just place this trade there. Again, I don't suggest either that this is a good trade. It's just to balance my long and my short trades here so that you see how easy it is to put on both of those trades. Now I've talked way too much, and so I have a really hard time to push now through those other markets which I wanted to show you guys, but I'm trying my very best to do so. Let's have a look at the Nasdaq. The Nasdaq, obviously, beautiful uptrend. Once again, you can see those levels at work just beautifully. Clear push higher, pullbacks. The weekly chart, it's a clear uptrend. Just look at the structure of those moving averages. This is what a strong trend looks like. And it doesn't matter if you look at the monthly chart, the weekly chart, or the daily chart, you get that same big picture here. Looking at those lower time frames, you see some noise here on the 15-minute chart, but again, just looking here at the 2-hour chart, for example, it's smooth flowing price action. No nasty gaps, no nasty surprises, usually very nice tradable opportunities. Now you might think that if the Nasdaq is going strong, the other US indices might be doing so as well. Let's have a look at the SP 500. And you can see that, yeah, it's been trading higher, but the picture just doesn't compare to what we've seen with the other indices, or especially with the Nasdaq. But what we can start to note here is that price might be pushing here against another level and might be setting up to break out of this level to the upside. Remember those momentum breakout trades that we saw earlier on the hourly chart of euro against the US dollar? Something like that might be also happening here. I don't know. Nobody knows for sure. We have to look and watch. And we already start to see here that if we have a look at those 2-hour charts, the perfect level just is not there. I have this touch here, but there it's just really nowhere. And if I'm trying to pull this level down, neither perfect touch, is a little bit something like that. But we already had this breakout here. And currently, yeah, the S&P 500 might be feeling the urge to push higher. It's just not really that precise, that tradable for me right now. So keep on monitoring those levels and see what's going on there, and if it qualifies for potential trading opportunity for you. For me, it's really just if I want to be long the indices, I'm definitely looking at the Nasdaq, because the Nasdaq gives me a much clearer and cleaner picture here compared to the other indices. Quick wrap up with a short outlook here on gold. And gold pretty much is a mess right now. You might think that gold just bounced off this 1200 level. And let's put this level on here, in here. Now you might say, why is this a level? Well, we have seen a little bit of reaction here, here, and here, but not precisely here. On the other hand, 1200 is a big round number. And those big round numbers usually always have some kind of attraction potential. And people start to pay attention to those. And I think 1200 in gold definitely is something like that. Of course, if it was $1,000 per troy ounce, that would be most perfect and most perfect big round number. But 1200 definitely also qualifies. again, another level that we might be watching would be something around here. And you can start to see that we have a little bit of reaction here. We pushed higher there and definitely touches here and there and there. And so we've just moved above this level. However, it's a downtrend on the daily. We have made lower highs and we have made lower lows. And those moving averages already have almost fallen into place. We see the 50 is pretty much soon now above the 20. So the daily gives me definitely indication here for a downtrend, and even this bounce higher here doesn't really qualify as that much of a bullish setup here. I would wait now for my trading to see if I get a shorting opportunity sitting directly here below this identified level of about 1,230 bucks. If I get a short setup there with a level and this level working for me, I might be interested. The idea here then, of course, would be to see if price would go and retest this low of around 1,200. But that's just the big picture. Always have a look at the lower time frames. Search if there are trading opportunities there. Personally, for me, those should always be in line with what I'm seeing here on the big picture. And the daily clearly hints for me here at potentially lower prices down the road. All right, everybody, that's it pretty much for today. We've run a little bit over time. If you have any further questions, please just let me know. And if you want to be in touch with the good guys at Nadex, here are multiple ways to do so. Please, if you haven't done so, sign up for the demo account. I could only show you to place 2 trades now today. I hope you have seen how easy it is, and it's just like anything else. It takes a little bit of practice to understand this fragile balance between time to expiry, time left in the option cycle, and risk-reward ratio. And the next thing is the probability of a potentially profitable trade coming from the statistical mathematical point of view. Practice makes perfect. Practice with this demo account. You see how easy it is to sign up for that set demo account. And yeah, if you have any questions at Nadex, visit the homepage, write them an email. And yeah, if you sign up with Nadex, you have access to the advanced education package. You will learn much more about the strategies that I presented here, briefly touched upon only here today. You could visit our homepage, Trade with Position, to sign up for a similar package. Please don't do it. You can save yourself about 900 bucks. I would rather suggest open an account with Nadex, put those 900 bucks into that account, get the same educational value absolutely for free here, and get started with your trading at Nadex. That's it from me for today. Thank you very much for the feedback, everybody. Really appreciate it. And yeah, talking about feedback, there's a short survey after today's session. Any feedback is appreciated. We want to improve those sessions as much as we can for your viewing pleasure and your educational benefit. And yeah, once again, thank you very much for tuning in. And now to all of you, have a great day. Happy trading. Catch you next time. Take care. Thanks again, and bye-bye.